I'm Matt Bouchard with REIT.com here in San Diego for REIT World 2012. Joining me for this CEO Spotlight is Dan Fulton, President and CEO of Weyerhaeuser. Dan, welcome.
Good to be here, thanks.
The housing market seems to finally be on the road to recovery and new starts are starting to ramp up. How stable do you feel this recovery is, and what does that mean for your wood product business?
The housing recovery is underway. We started to feel serious recovery about this time last year, fourth quarter, and it carried into the first quarter and then strength into the second quarter. We were concerned about that because we'd been through a couple of false starts. Second quarter was relatively strong. Third quarter activity continued. In our home building business, we own 5 regional home builders, and our sales through the third quarter, year over year, are up about 40%. So that feels pretty good. And importantly, sales are up in every single market in which we participate. And we are finally starting to see some price appreciation, which is a really strong signal for recovery. And so, that's positive for our home building business. More importantly, it's positive for our wood products business. As you mentioned, our wood products manufacturing business, we are a very large manufacturer of a wide variety of wood products, starting with lumber and oriented strand board and engineered wood products. And so we're seeing the recovery manifest itself in improved orders for our wood products, and more importantly, some upward price pressure. And I think that we are on a path. We're still producing at a very low level of starts. So this year, I would expect we'd go out the year at about 750,000. Long-term trend numbers, would be north of 1.5 million. And so we've got a long ways to go in this recovery. I think there'll be some fits and starts as the supply channel readjusts to this increased volume. We've got a number of facilities that manufacture wood products and other components that go into housing that were shut down during the downturn. And so that capacity will need to come back in order to supply the needs of construction. But we're really positive about the direction at this point.
So with that segment on the upswing, you've also reported a strong jump in earnings from your cellulose fibers division. Now, what are causing those results?
Cellulose fibers results for the third quarter were primarily driven by the fact that we had, in the second quarter, had a number of planned maintenance shutdowns. And so on a quarter-over-quarter basis, the biggest change was the lack of these significant shutdowns for planned maintenance. Pricing has remained relatively stable in that business. It's softer than it was a year ago. That business for us is more impacted by global demand. About 2/3 of our product in our cellulose fibers business is sold outside the U.S., both in Asia and in Europe. And so we are seeing some impact of the Eurozone problems that affects both pricing and demand. And then we experienced a little bit of a downturn in the Far East and China in particular this year that we would expect to recovery as we go into next year.
And picking up on that, exports to Japan and China are also key to your timberlands business. What is the outlook in that regard?
Outlook's really positive. So for us in our timberlands business, about 1/3 of our acreage is in the U.S. West and equally split between Washington and Oregon. We are uniquely advantaged in terms of the location of our timber resource, the quality of that resource, and the fact that we control our own export facilities. And so we've had steady demand for Japan, which is our largest export market, year in, year out. And that volume has continued to be relatively strong. We've experienced a little bit of increase in Japanese demand related to the earthquake and tsunami. There's also some activity in Japan that seems to be tied to anticipated increases in consumption tax that would affect housing. China volume has been real significant for us over the last 3 years on the margin. So it's nowhere near the volume that we would send to Japan, but it has affected pricing. The Chinese market slowed down towards the end of last year, was relatively soft beginning of this year. Third quarter, we saw an increase in export activity to China. We've got positive view of long-term Chinese demand. But in China, the distinction is they don't build homes with wood. They use the wood for industrial purposes, concrete forms, and packing and shipping materials. but it is driven by their overall GDP, and on the margin, it does affect pricing off the West Coast, and so we're relatively positive long-term, both of the impact of China as well as our long-term market, which is Japan.
Thank you so much for joining us.
Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.